The war in the Middle East heats up between Israel and Iran. Is an oil war next? And what would this mean for inflation, economic growth, and markets? Joining us to discuss this is John Feneck, President and CEO of Feneck Consulting. Welcome back to the show, John. Good to see you again.
Thanks so much, David.
John, you've been on the show last year calling for higher gold and precious metals prices. Both gold and silver have done spectacularly per your forecast, so good call there. We're going to revisit your call and get an update on both these metals in just a bit. But first, let's talk about what's going on with the Middle East. Take a look at my screen here. Financial Times, is the Middle East on the brink of an oil war? Reads this headline. Israel is considering strikes on Iran's energy sector, a retaliatory option that has rattled markets and raised concerns that the war in the Middle East could threaten global oil supplies. Any Israeli attack that disrupted Tehran's 1.7 million barrels per day of oil exports would have ramifications for global energy markets, while any Iranian retaliation targeting rival oil exporters in the Middle East would cause even more upheaval. There seems to be a huge risk for not just global oil supplies, but also for inflation, as a shock in oil may send prices temporarily higher. How do you read the situation?
Yeah, so we've been talking about this since October 7th of 2023 with our subscribers and on shows like yours, David, and trying to relay to investors the seriousness of the matter here. And now you're starting to see how serious it's getting. Iran's actions this week in defense of Hezbollah, meaning Lebanon, really underscores the fact that they're not going to play ball with the U.S. The U.S. has been warning Iran for the last 12 months. You know, if you do something like this, we're going to take it seriously. So this week has been pretty tenuous. It's a really big problem that is getting worse in the Middle East. And so I think oil prices are headed much higher based on that kind of an article you just showed your viewers, right? I mean, if you have a disruption in places that produce a lot of the world's oil, that is going to send a shock through the system. And not only will the commodity do well, but oil stocks would do quite well as well.
If oil goes much higher, would there be a level or direction or some sort of level that you think would induce a recession? In other words, at a certain point, oil becomes way too expensive. People start spending less. Could you see that happening?
Yes and no. I mean, I think when you looked at Katrina back, almost 20 years ago, you definitely saw the impact of that on the streets, meaning less people driving. I think you could see that more where people that are on fixed incomes just saying, hey, I can't afford, to do all the things I used to do, whether that's travel via air, travel via car, et cetera. So it could really impact the economy from that perspective, like the travel industry. But I don't think it creates a recession on its own.
What is your outlook overall on risk assets? Great year for stock markets. This is one thing that a lot of bears on the markets on my show and on other shows got wrong, frankly. It surprised a lot of people who were bearish on the stock markets. Risk assets rallied despite the Fed having kept their rates high for a long time. And now that we're finally getting a rate cut, people are talking about the markets shifting. What's your read on risk assets right now?
I think the technology space is still worrisome to me in the sense that it is too much of the overall S&P 500. If you go back and look at history, it's never been this much in the top 10 holdings of the S&P, meaning the top 10 of the 500 stocks in the S&P. You've never had this overweight. The last time we saw this much of an overweight in any part of the S&P was 2008. So I'm not drawing a parallel there. I'm just saying that you have to be cognizant, right? That when you have this much money in Nvidia, in Apple, in Amazon, portfolio managers are taking huge risk. Let me give your listeners a little bit of knowledge here because I come from that world, as you know, in the mutual fund world. When
Hmm.
you're a mutual fund manager, your bonus is subject to you beating your index that you're benched against. In this case, many investment managers are benching against the S&P 500. If you don't outperform the S&P 500, you don't get a bonus on December 31st. It's that simple. So you're taking undue risk, I think, as a large cap core manager, as a large cap growth manager to keep up with this overweight in tech. And that's what I think is the biggest risk to the overall market right now is that we're really overweight in one sector. I'm not saying it's a poor decision. Clearly, we've had some great returns. I'm just saying that people need to be understanding of this, especially elderly people, right? if you're 65 plus and you're, 100% in S&P and your 401k, you really need to sit down with a financial advisor immediately and think about, your allocation, right? Because this has been a run from March of '09 to now. I'm not saying it ends tomorrow, but I am saying that, it wouldn't be unusual to see a 10 to 12% correction on these levels.
What would a higher oil price, going back to your higher oil price outlook, what would that mean for stock markets?
Um,
Obviously, energy stocks would do well,
yeah.
but presumably a lot of companies and sectors that require energy overall would see
Mhm.
their margins decline, assuming they can't keep up with the raising prices. And just generally, oil has been known to have been inflationary when it spikes or deflationary when it collapses. So it has had an effect on CPI. Does this translate to the markets? That was what I'm wondering.
Yeah, understood. And obviously, every time Fed speaks, meaning Powell, he is discussing CPI literally every time. So this is something that the Fed has a very close watch on. It's something that the ECB and Lagarde in Europe has a close watch on. So that would have a global rip through the economies, a global impact, I should say. And yeah, it's worrisome, but I don't really worry until I see stuff. I act based on facts, right? Like instead of looking out at like what may happen. Sure, everyone, tries to handicap things, but I would just say that the US is directly involved, no one would argue, with two conflicts currently. When China had their 75th anniversary of the party on September 30th, they were literally talking about taking back Taiwan. And this was literally 4 days ago, right? So if you have a third conflict, then you've got, a real interesting backdrop here. And I don't think you have as soft of a landing as people expect.
The Fed is calling for their Fed funds rate to come down, while their median projection is 3.4 percent by next year. The markets are expecting even lower. Both parties, I'm guessing, are expecting inflation to be tame or come down from current levels if long rates, or even the short term rates following the Fed funds rate will come down. Do you agree with this assessment that inflation is going to stay relatively low or even trail lower towards 2% bound?
Well, both Powell and Lagarde have said we want to see 2% in a sustainable way. It's not like you touch 2% and then we're good, right? So like I think that they're going to be accommodative for a while, but I don't think they're going to be as accommodative as the market would like, based on what you're just saying, right? Most people want 3% or lower, not 3.4%. If you look at the Fed funds tool that's out there called the CME Fed Watch tool, which is a free tool to investors, it's showing a 98% probability of a cut of 25 bips on November 7th. So we could see a series of 25s, from November 7th on into next year. Will that be enough to make people excited? I don't know. We'll have to see how the markets react.
Okay, so generally, are you expecting more volatility up ahead?
I expect volatility between now and November 7th, meaning that we have a lot going on. The BRICS meeting, October 22nd through the 24th, is held in Russia this year. There was an article on CNBC just last week saying that, you know, it's not just 30 or 40 countries from last year's BRICS meeting that wants to get into the BRICS. It's now over 90 countries that have said we'd like to apply for membership. And that's pretty shocking. That's a big number. So if they were to announce something that would surprise the markets there, I don't think the timing could be any better. I'm hoping they don't, but like if you're doing this right before a US election on November 5th, it would be ideal timing for them to kind of shock the markets. So you have to watch that. The November 5th election is obviously critical. And you've got the Fed on the 7th, which clearly is going to be a cut, but it's more important to kind of get a feel for where Powell's headed into Q1.
If I flip over to my screen, let's transition into commodities now. So we
Okay.
spoke about energy. Energy, if you take a look here at the BLS chart, energy has been declining by -4% year over year. If you take a look at gasoline, that's also down -2.2%. Commodities, even commodities, less food and energy, that's been deflationary, -1.9% was the last reading. Why are energy and other commodities, and gas for that matter, why are they going down in price? What are they signaling here?
That's a good question. I don't follow oil and gas on a daily basis. I mean, I'm,
Well,
I'm
let's
much
stick
more of
with
a
Yeah, let's just stick with the metals. I mean,
Sure.
deflation in the other commodities. What's going on here?
Yeah, I mean, gold is telling you something, right? If you look at the price of gold right now at 2650 as we record this, it's telling you that something out there is about to drop, right? Like smart money is getting into gold. It's not just central bank buying. One of the last times we talked about central bank buying, right? And that was definitely a theme that has helped gold. But that really started to accelerate with the Russia invasion of Ukraine in February of 2022. If you look at a chart, it lines up directly with that. And other central banks that are on China's side of the ledger have followed suit, right? So I think that it's not just about central bank buying right now. It's wealthy individuals that are behind the movement in gold, but also the generalist movement is starting, right? You're starting to see more people look at gold as a hedge. If you look at Costco, for example, that sells gold bars, they're sold out. They're moving into platinum bars as of today because they can't find any more gold bars to sell. So, I mean, there's tremendous demand for ownership of gold right now, which is great. We actually got our target wrong in January. We were thinking 2,500 this year, and now we're quite a bit higher than that. And silver being the other precious metal is something that we've been involved with for 24 years. I was on the silver team at Sprott. I follow it, by the hour. I think silver is going to catch up here and make a really nice move into 2025. As we sit here right now, the gold to silver ratio, which is an ounce of gold divided by an ounce of silver, is at 83, which is very elevated. And I think that number is going to come down as maybe gold trends for a while, and silver plays catch up and breaks through that 32 and a half level up to test 35.
If
Yeah,
you take a look at my, let me just flip it to my screen here. If you take a look at my screen, I'm gonna put up a silver chart. So this is the silver price, and I'm gonna overlay that with copper. Now, copper, as you know, is Dr. Copper, uh, economic metal. And over the last year to date, they've held a very close correlation, silver and copper. I've showed this chart a couple times on my screen, on my show actually, and people have told me that this is one of the reasons why they believe silver is now trading like an industrial metal. Would you go as
yeah.
far as to say that silver is now an industrial metal?
I would say it's both an industrial and a precious. If we were to look at a 5-year chart on this, if you wanted to click that,
Yeah,
this is not something we discussed offline or anything, just for your viewers' sake.
sure.
If you look at 2022, where February of 2022 happened, right?
Yeah.
You saw an immediate like change in. I mean, you can see the huge move down there. A lot of that was following the Russian incursion, right? So like
Mhm.
it's going to trade like a precious on bad news initially. If you look
Okay.
at what's happened just this week, right? I mean, silver really responded more as a precious metal. I watch it, like I said, mostly most days by the hour. It really traded quite nicely the last few sessions, and it's been able to recover from pre-market being down to finish up. We call those reversals. Very very
Right.
bullish pattern. So I do agree with your other guests that it trades like an industrial many times. But don't forget, silver is a
Yeah.
precious metal first, and I think it will show that if Iran, let's say, did have something crazy happen with their oil reserves, or they were to start a bigger conflict that the U.S. got more directly involved with, silver is going to respond up, not down.
That's an excellent point that it's both because I'm overlaying it now with gold as well, and it's done quite well relative to gold. Now, look, hold
It's
up. Now, correlation does not necessarily mean causation. It's possible all these
right.
metals have moved together in tandem because of external forces, right? It's just interesting that silver is tracking gold and copper. Suppose, I'm just hypothetically, suppose copper were to go down and gold is to go up next year, or vice versa. What do you think silver will track more if we were to speculate?
Well, copper is clearly an industrial metal. It is not a precious metal at all. So people that want to hedge in a portfolio should not be buying copper. That is a bullish metal, in my opinion,
Hmm.
meaning you have to have a softer landing in the economy. You need to continue this theme of electrification globally, et cetera, right? Gold and silver have been around for thousands of years and they act as a hedge in a portfolio, generally speaking. If you look at the gold, 1 year chart on a rolling basis, I think we're up 37% or 38%, last 365 days. That's a tremendous gain. I can't even remember in recent years that you've seen nearly a 40% gain in gold, right?
Yeah. Well, silver did very well as well. Like last year, a year ago, it was at $20. Now it's
Yep.
at 32. That's more than a 50% increase from a year ago. Is the top in?
No, we're really just knocking on a breakout here. So at 32, pretty much on the nose right now, you'll test 3250, like I said, maybe at some point in October. And if you break through 3250 to 33, that brings in a test of 35. And that test of 35 will be critical. I expect some resistance there. But if you can get through 35, then there's very little historical resistance between 35 and 50, 50 being that big round number. That's the all time high.
We've been look. I just to play devil's advocate, and I know I'm gonna have to ask this because I know the comments are gonna ask this. I could smell the comments from 10 miles away. We've been hearing about a $50 silver price for literally 40 years, and it hasn't happened. So why are we talking about it again now?
That's a great point, and I completely agree with you. If you check my work as a listener, I was talking about silver not being able to close above 26 an ounce. This despite silver being my biggest holding. So I'm always trying to tell it like a straight person as opposed to someone who's trying to pump a commodity because it's not worth it, right? We're
To
trying
be
to
to be
attract.
and to be fair, I wasn't very fair. Silver did retrace $50 in 2011, but very very briefly,
Yeah.
and it came back down. So anyway, I'll let you finish.
Yeah, it's true. It did touch there very briefly and bounced right off of that. So 50 is obviously a major resistance point. But let's look at the positive too, David. 30 was resistance for 11 years. That's the last time we hit 30 was on the way down from 50 to 40 to 30, right? And we broke through 30 like butter this year twice. So 30 is out the window, and that is why I'm so bullish because 30 to me is much more important than 50.
Why has 50 been such an important resistance level for twice now in the last 40 years since 1980?
Couldn't say. I mean, I was 10 years old in 1980. And I think that 2011 situation was obviously a bit euphoria, and
Yeah.
it's a good point for investors because I think we're at that euphoric point right now with the broad market, right? Markets run for longer than people expect. To your point, David, of somebody guessed being overly negative, right? That they didn't see this coming. In fairness, I didn't think we'd be at this point in the S&P either. But let's just say that, greed is something that people need to contend with in their lives. I think we've all made a lot of money coming out of the COVID low. And even if you go back to 2009, when we last came out of that crisis, people have definitely made a lot of money. So you have to review your portfolio, review your real estate holdings with professionals that can try to help you take some risk off the table, I think, at this point.
If you take a look at my screen, and this is just, and again, I'm just trying to challenge the silver narrative here because I've interviewed a lot of silver people.
Okay.
SPX, this is silver. Um, and my own audience challenges this, and I have to ask on their behalf. The silver price has done very well against the broad stock market since 2000, greatly outperforming the S&P 500 by pretty much 200% since 2000. Now, people say, well, you have to cherry pick timelines. I mean, it's done very well since 2000, but it hasn't done well since 2012. It hasn't done well since 1980, right? Versus the general stock market. And so my question is, if you were to take a longer term historical perspective and you were to make the case that silver uh, is a good investment in the long term, it's difficult to make that case unless I pick specific time frames that silver has outperformed the stock markets. What is your longer term thesis for silver outperforming the S&P for the next 10, 15 years? Do you see
Yeah.
that scenario happening?
I mean, look, I want to be as forthright as possible. We don't really look out more than a year. I mean, to tell anyone who comes on this show and says in 10 years this is going to happen, you should just immediately stop listening. There's no one that can actually predict anything past a year or two, in
Yeah,
my opinion, in this
I
kind of
understand.
crazy backdrop. But I mean, look, I'm a silver bull, but I'm a calculated bull, meaning that last year I was saying not above 26. I was correct. This year I was saying we'll test 30 and break it. I was correct. Right now I'm saying we're going to test this 32 to 33 level. We'll break it, and then we're going to get to 35 and see what we do there. So I always take things one step at a time.
All right, so that's a 10% move from current levels. Are you expecting that by year end in 2 months, or
By
do you have a
January.
by January? Okay. Um, Anything that could happen that could derail your silver bull thesis. In other words, if you come on the show in January and say, "Hey, things have changed. I'm now bearish on silver," hypothetically, what would that be?
Any type of black swan event, we've already seen what COVID could do to like safe haven assets like gold and silver, right? Everything got sold off, David. There's no guarantees in investing. So, when you see some type of black swan event, you need to protect your capital because what happens? Well, people are on margin right now. When they get a margin call, they get a couple of days to meet that call and they're going to fund that call with something like gold, right? Gold's up a lot, like we talked about. Why not take some asset that's done really well for you and sell that to fund your losses in tech or whatever else if we get a massive sell off. So, I think that's one thing that could really hurt silver, of course. I just don't see it breaking 26 to the downside. That 25 to 26 channel has good support there. So if it were to pull back to 25, 26, I'd be buying with both hands at that level.
Let's go back to my chart one more time. So this is the BLS commodities chart that I showed you earlier. Deflation. Do you think the China stimulus coming out of the central bank and the government is going to be enough to propel this green line back into positive territory? In other words, make the commodities grow again?
Yes, but I'm not one of these commodity cycle bulls that say we're good for the next 10 years, right? Again, I don't know how anyone looks 10 years out. But let's just say that this is not the super cycle necessarily that people are talking about. I see that in a lot of different articles. And why I say that, David, is that if you look at what's happened with corrections, right? 0809 was, well, let's start with 2000. 2000 and 2003 was a couple years. 2008 to 2009 was 9 months ish, right? You look at 2011, that sell off to 20% on the S&P was 4 months. If you look at COVID, it was less than 2 months. Everything is getting shorter and shorter and shorter. Why is that? Because algorithmic buying and selling, right? The velocity of trading has increased and investors are missing this. So I think that saying a rally for 10 years in commodities is
No, no,
is
I
really
understand.
unfounded.
I understand, but my question was specifically the China stimulus that
Mm-hmm.
happened recently. China cut their bank interest rates, prime lending rate. They've also cut mortgage rates to stimulate the housing sector. Immediately after that news, the Chinese stock market rebounded. We saw several
Right.
mining stocks like Freeport McMoran rise on that news, up 9%, I believe, on that day. This was a week and a half ago. Do you
Yep.
think that the stimulus in China is going to at least for the medium to short term, short to medium term, see a rise in commodities like copper, tin, steel, base metals used for construction?
Yeah, absolutely. I mean, I do.
Okay.
Yeah, I think that's positive for all of the things you mentioned there.
Of all the commodities we discussed today, and perhaps other things that we haven't touched on, which are you most bullish on right now?
Well, silver, I think at 32 could go much, much higher. Again, there's very, very little resistance between 35 and 50. So that's what, from a charting perspective, is exciting to me because 30 to 50 is implying a very large move. And I'd be buying a lot of silver stocks alongside of that because silver stocks have tremendous leverage to a move in silver. Copper, if you have a soft landing, if you believe in the China narrative you just outlined, copper is going to do much better next year. We're trading at 456 a pound as we record this. $5 is that big round number people like me are looking at to see how we do there. If we can break five on a couple closes, it's go time, and you better have some copper stocks as well.
There seems to be capital rotating into the mining stocks right now. In the last 3 months, the GDX has been outperforming the gold price. The GDXJ has also started outperforming the gold price. This was not the case in the first half of the year. So, what's
Right.
happening right now for the mining sector?
What I think you're seeing there is the larger cap holdings that make up something like GDX, which just for your viewers' benefit, that is the largest ETF you can buy in mining. And so it's a good barometer for how things are going. The top three holdings there all had earnings in January, April, and July that beat expectations or met expectations. And that's a different thing, David, right? Because you and I have known each other for about 4 years. Some of these earnings have been awful. Why is this? Well, these are producing companies. They're all in sustaining cost per ounce, meaning how much it costs them to pull an ounce out of the ground is somewhere between 1250 and 1550 an ounce. So when you have gold at 2500 plus, you're clipping a huge margin there. I think your listeners should look at these stocks in October later this month when they come out with their next set of earnings because now gold has trended at a very high price for the last 90 days and I think you're going to be surprised to the upside by a lot of these companies in their next earnings round.
People can follow John Feneck. I'll put the link down below to get his preferred mining stocks. But just generally speaking for the audience here, what is your methodology for picking stocks?
That's a great question. I'm not going to give away the entire farm, but I will say a couple of things that can help people. So first off, you have to look at management. There's a lot of shady people in every industry. I think management is something we do really well in terms of going to conferences. I attended a conference 3 weeks ago. I met 28 CEOs in 3 days. That is not easy to do. And my followers generally don't have the time to make those calls, send those emails themselves. So that's why they pay for my services. But in those interviews, David, I'm asking people, don't tell me what's good. I can read your website to discern what's good. Tell me what's bad or what can go wrong here because I want to avoid missteps. Avoiding missteps is something that you need to do as an investor, period. Like that's something that most people get wrong. They follow trends and they don't ask the second or third question, what could go wrong here? Um, Outside of management, I look at jurisdiction. Jurisdiction is my third screen, actually. My second screen being the project, of course. If it's a good project, that's going to help a lot. But the third thing being the jurisdiction is growing in risk. Let's look at Mexico. Mexican silver stocks in particular over the last 2 days have really popped. Why? Because Scheinbaum is in office and AMLO, who was the previous leader in Mexico, was anti open pit mining and has been for 18 to 24 months now. So these stocks are just starting to respond from a very low price.
Yeah.
So there's things like that you say, okay, Mexico 3 years, 4 years ago, when we met each other, great jurisdiction. Now it's a questionable jurisdiction. And so we need more information. Peru, same thing. Castillo goes into office.
Mm-hmm.
Castillo's been out of the way, by the way, for 22 months now, but Peruvian stocks still trade poorly a lot of times. And you're
Right.
like, okay, Peru has moved on, people. Like that's something that you can go back to now, but the market just doesn't see it that way. So I think investors need to get guided by someone like myself to get to say, hey, we like this jurisdiction for a certain reason now. And lastly, I'll just bring up the capital structure. Capital structure matters a lot in any stock that you look at. If there's a billion shares out, you're not going to get the lift in a stock, right? Because there's too many potential sellers. So we do look at how the capital structure looks. And then we ask the second question of management, how much do you own, right? If you own 1%, that's kind of not interesting. It's like you don't have conviction in your own stock. So ownership is important too.
Good stuff, John. Well, you talked about your work. So where can we follow your work? And tell us about, you have an upcoming conference. Tell us about
Yep.
that.
Yeah. So my website is fenneckconsulting.com. And if you click performance there, you can see our track record for the last almost 9 years in mining. Very proud of that. I work very hard at putting up some decent numbers that investors hopefully will benefit from as well. My conference is going to be October 20 through 22 at the Four Seasons, Fort Lauderdale, Florida. We'd love to have any of your listeners approach me. My contact info will be in the show notes, and we'll try to get you a pass to that. We've got some amazing speakers coming there to talk about some of the issues we brought up today, along with what does 2025 look like? What is the BRICS impact? Literally the same week of our conference, what would that have an impact on markets potentially? And we're doing a broad commodities conference, David, called Commodities Global Expo 2024, where we're going to have gold, silver, copper, nickel, platinum, oil, gas, rare earths, like a bunch of different, type of companies there that investors can listen to.
Okay. We'll put the links down below. Thanks very much, John. Good to see you again. And thanks for coming on.
Thanks for having me.
And thank you for watching. Don't forget to like and subscribe.